You own your own business, you make good money, and you have great credit. So why is it so hard to get a mortgage when you're self-employed? If you're self-employed and trying to buy a home in 2025 and beyond, this is what you need to know. Hey, I'm Josh, and I help home buyers qualify for mortgages even when the paperwork doesn't look great on the surface. Today, I'm breaking down how to buy a home if you're self-employed. So here's the problem. If you're self-employed, you've probably run into this like myself. You probably file taxes pretty aggressively. You probably write off as much as possible because, well, you can. But then you go to a lender to buy your first house or your third house, and they say, hey, we need your tax returns for 2024, 2023. The last 2 years typically is what they're going to require. They take the tax returns, they look at the net income, and they say, sorry, you don't show enough income. You're taken aback because your business is thriving. You know you're making good money, you've saved up a down payment, and you have great credit. So what's the problem? The system for qualifying for a mortgage is typically built for consistent income or W-2 individuals. But as a self-employed individual or business owner, there are options. Let's go through a couple of these options. Number one is a traditional mortgage, a full doc loan. Now, this does typically require preparation in advance. If you're looking to buy a house and you're self-employed, you need to prepare your taxes in advance. I have sat down with many self-employed individuals and said, hey, you're looking to buy a house in 1 to 2 years. Well, you need to start now based on how you're filing your tax returns. This means that you need to be showing consistent and growing income year over year on your actual taxes. This also means that you're going to be paying more taxes. You're not going to be writing off as much, which means you're going to be paying more taxes in the end to show more income on those returns. A traditional mortgage is going to offer a lot of benefits as far as like lower interest rates if you're actually qualifying for an FHA or conventional mortgage versus some sort of non-qualified or non-QM mortgage for specific individuals. Number two is a bank statement loan. There's loans out there that will actually qualify you based on your bank statements and your business bank statements to see the deposits incoming for your business. They qualify you based on the average monthly deposits into those accounts. No tax returns are required on these programs, but you will have higher interest rates. Bank statement loans are best for individuals not reporting a lot of income on their tax returns, but they can show those deposits in their bank statements. Number three is a 1099 only. Number three is a 1099 or profit and loss loan. This program is great for a lot of independent contractors. It does require you to show your 1099 and get a P&L filled out by your tax advisor. As long as you can show increasing income year over year, month over month, this is a great program for you. This program does come with higher down payment requirements, higher credit requirements, and higher interest rates because it is a unique non-QM program. Number four is DSCR loans. Now, DSCR loans are specifically for investment purposes, but they're not going to require you to show a 1099 or your taxes or even pay stubs because it's only going to go off of the income being produced by the property. As long as your rent exceeds or is at the same level as your mortgage payment, that's all the DSCR loan is going to utilize rather than going off of actual personal income. Now, it does require higher credit and larger down payment requirements, but it's very fast and very seamless process. DSCR loans are best for business owners looking to build wealth in real estate or take advantage of the tax write-offs that come with real estate. Now, as a recap, if you're self-employed, you aren't out of luck. You do have options such as, again, a traditional mortgage, a bank statement program, a 1099 and P&L loan, or a DSCR loan if it's an investment property. The key is matching your financial situation to the right program and working with a lender who knows their way around these programs. If you have questions about any of these programs, drop a comment down below or book a time with me using the link in the description. If this video is helpful, please like and subscribe. Thank you so much for watching. I'll catch you on the next one.